Hello everyone. Today we are presenting an intangible asset analysis for Tech Innovator Limited. Tech Innovator Limited is a technology company. It focuses on developing software solutions. The company operates in a knowledge-based and innovation-driven industry. Its main competitive advantage comes from intellectual property, not physical assets. As of 31st December 2024, the company has the following intangible assets: patents worth 1.2 million, trademarks worth 0.8 million, and internally generated software worth 1.5 million. The technology industry is highly competitive and changes very fast. Products usually have short life cycles, and technology can become outdated quickly. The purpose of this case study is to examine how intangible assets are accounted for, with a focus on AASB 138, a special recognition and initial measurement. Now let's look at the recognition rules and how they apply to Tech Innovate's software. Under AASB 138, an intangible asset can be recognized only if four conditions are met. First, the asset must be identifiable. Second, the company must control the assets. Third, the asset must provide future economic benefits. Finally, the cost must be measured reliably. Tech Innovate software meets all four conditions. It is identifiable because it comes from a specific development project. The company controls the software because it owns all usage rights. The software is expected to generate future economic benefits by supporting operations and generating revenue. In addition, the development costs are clearly recorded, so the cost can be measured reliably. For initial measurement, AASB 138 requires the cost model. Therefore, the software is recognized at 1.5 million, which is its development cost. That's all. Thank you.
Hello, my name is Jian Xu. Now, I will introduce my part. According to AASB 138, intangible assets with finite useful lives must be amortized systematically over their useful life. The purpose of amortization is to allocate the cost of an intangible asset over the period in which economic benefits are consumed by the entity. AASB 138 also requires that the amortization method should reflect the pattern of consumption of those economic benefits. In practice, the most commonly used amortization method include the straight-line method, the units of production method, and the accelerate method, such as the double declining balance method. The straight-line method allocates the amortization expense evenly over the useful life of the asset and its suitable when economic benefits are consumed consistently over time. The units of production method links amortization to actual usage or output, which is only appropriate when usage can be reliably measured. Accelerated method recognize higher amortization expenses in the early years and are suitable when an asset loses value more rapidly at the beginning of its life. For internally generated software, economic benefits are generally consumed evenly, making the straight-line method the most appropriate choice. In this case, Tech Innovate Company internally generated software has a cost of $1.5 million and an estimated useful life of 5 years. Using the straight-line method, the annual amortization expense is calculated at $300,000 per year. This method is recommended because the software is expected to generate economic benefits evenly throughout its useful life. The straight-line method is also consistent with AASB 138 and is widely used in practice due to its simplicity and transparency. This is my references. And while amortization allocates cost over time, intangible assets must also be assessed for impairment. The next section will discuss impairment indicators and the testing under AASB 136. Thank you.
All right, thank you so much. So here is potential indicator of impairment. AASB 136 patent and trademark impairment is checked each reporting date by Tech Innovative Limited. Technological advancements may make patent obsolete and worthless. Competition, consumer loyalty, and alternative products can diminish trademark demand and value, especially when sales fall short of plans. Underperforming patented products or branded software causes sustained sales or market share loss. Economic problem, market turmoil, and strategy changes like product emphasizes or technical performance may underutilize these intangible assets. If such signs exist, AASB 136 requires Tech Innovate Limited to execute an impairment test to avoid patent and trademark overvaluation. Next one is impairment testing process. Structure impairment sign evaluation is required by AASB 136. First, identify the cash generating unit, the smallest asset group that generates cash inflows independently. Patent and trademarks produce financial flows. Hence, Tech Innovative Limited requires this. Step 2. Calculates the CGU's recoverable amount, fair value less disposable cost is, or value in use. Fair value is the acquisition price, while value is used to discount future asset or CGU cash flows. Comparing financial statements carrying and recoverable amounts. Report impaired losses if carrying amount exceeds recoverable. Profit or loss is recognized and assets or CGU carrying amount is adjusted to avoid overstating assets. So Visual 8 Impairment Testing Flowchart. The impairment testing flowchart reveals AASB 136 systematic asset overstatement. Tech obsolescence or sales decrease initiate it. Patent and trademark produce money, hence Tech Innovative Limited needs a CGU. After CGU evaluation, fair value less disposable cost or use value is recovered. Fair value is the asset's instant sale price, whereas value in use is the present value of predicted future cash flows from continuing use. Confirm recoverable amount against financial statement carrying amount. Profit or loss must recognize an impairment loss and lower asset value if larger than recoverable. If not, disability is overlooked. Step-by-step impairment evaluation promotes compliance. Thank you so much.
Hello everyone, I am Mahmouda Akhtar Mili and today I am presenting the disclosure requirement for intangible assets for Tech Innovate Limited, focusing on compliance with AASB 138 and AASB 136. Starting with the mandatory disclosure under AASB 138. For Tech Innovate, transparency is key. We must clearly disclose the measurement basis, whether we use the cost model or the revaluation model. Crucially, we need to specify the useful lives and amortization methods for each asset class. For instance, whether an asset is finite or indefinite significantly changes its reporting. Lastly, a full reconciliation is required to show the movement of asset values from the beginning to the end of 2024 reporting period, ensuring all stockholders have a clear view of our asset health. Let's look at the financial snapshot of Tech Innovate. As of December 2024, our portfolio includes patents worth 1.2 million AUD and internally generated software worth 1.5 million AUD. Both are finite assets and are amortized using the straight line methods. However, our trademarks valued at 8 lakh AUD are unique. They are classified as having an indefinite useful life. This means they are not amortized. Instead, as per ASB 136, they undergo a rigorous annual impairment test to ensure their carrying value remaining realistic in a competitive market. In a fast-paced tech environment, market changes are inevitable. This decision tree shows our strategy when a technological shift is identified. We take two simultaneous actions. Under ASB 138, we review if the useful life of assets like software has shortened, updating our amortization schedule prospectively. At the same time, under ASB 136, we assess for impairment. If the carrying amount exceeds the recoverable amount, we recognize an impairment loss immediately. This dual approach ensures our financial statements reflect the true economic reality of our assets. To conclude, these disclosures and tests are vital for maintaining the integrity of Tech Innovate's financial reportings. These are the references and standards used for this presentation. Thank you for your time and attention.
Hello, this is Manisha. Today I'm going to talk about the impact of technological advancement on our life. So I will give you a short introduction. Tech Innovate Limited owns several intangible assets, including patents, trademarks, and internally developed softwares. Rapid technological advancements can significantly affect the useful life and amortization of these assets. According to AASB 138, intangible assets with finite useful lives must be amortized over their estimated useful lives and reviewed annually for indicators of impairment. New technologies may render patents, trademarks, or software obsolete faster, reduce market demands, or introduce competitive alternatives. Impacts and value and usefulness of the assets. My second slide is implication. Shorter useful lives of intangible assets increase amortization and impairment expenses, which may lead to lower reported profit and assets value. If management does not update these estimates regularly, there is a risk that the financial statement may not accurately reflect the company's economic position. My third slide is a recommendation. So I would like to recommend management team should regularly reassess the useful lives of intangible assets, revise amortization schedules when estimates change, and continuously monitor impairment indicators and market trends to ensure financial statements remain accurate and compliant. The conclusion part, I would like to conclude. Tech Innovate Limited intangible assets face rapid obsolescence due to fast changing software and technology. They are amortized over shorter periods and undergo annual impairment reviews under AASB 138 to account for potential obsolescence, reduce market demand, or stronger competing products. Here are some references. Thank you so much for listening to me.